So this past week, Snowflake announced their earnings, and as you can see from the daily chart, price crashed roughly 20%, and it was all based on the forward guidance that they announced. Now, when you look at things on the weekly chart, you can see that candle close below the resistance support band at $200. So can price go lower? It definitely can. However, going back to the daily chart, you can see that price will have to contend with that 200-day moving average, which is roughly at $176. So before we continue with the analysis, let's look at the actual results. So management noted that it is difficult to assess normalized consumption trends during the holidays, but product revenue still finished the year strong, up 33% year over year. New customers were driving much of the growth as companies are still migrating from legacy vendors. What seemed to send the stock down after earnings report was management's comments about near-term consumption trends. Snowflake makes money based on customers' usage of resources on its data cloud platform. So Wall Street analysts pay special attention to management's comments about this area of the business. The weak consumption trends mean that Snowflake's quarterly revenue growth may continue to slow. The consensus analyst estimate is calling for Snowflake to report revenue growth of 23% in the current fiscal year and only improved to 24% next year. However, Snowflake is still well positioned for long-term growth, as management noted that the strong demand for new customers in the quarter. But investors were hopeful that demand for AI-powered services would drive stronger demand in the near term. All right, so this could be seen as an opportunity rather than a loss. Let's just zoom out to the monthly chart because we haven't done that as of yet. And what you can see is, let me take this off the chart. Got these huge rejection wicks, and potentially this was kind of a sell sign that price was going to have a hard time moving higher and potentially will start to move lower. And from the monthly chart, if price gets below 180, say 180, that's where the previous three candles low end of the range was. Based on the room to the downside, there's nothing stopping from price from moving on down to the, say, the $150 level. Again, this is things as it appears on the monthly chart. On the weekly chart, again, if price breaches this temporary support at 180, there's a level of interest down at 162, but it's in the middle of the range, right? Nevertheless, it still is a rally-based rally. So that is weekly buyers, right? Origin of that move, this leg started at the 140 level. And that origin of the move was able to eventually take out the band. Although last week price is now below. So this might be a decent level to go long if price gets this low. I'm not sure that it will. However, again, if you get candle closes below the 180, it opens up the door for price to move lower to this $160 level. So let me know what you think in the comments. Is this an opportunity to buy, or should you take a wait-and-see approach and stay on the sidelines? Thanks for watching. Subscribe, please. Like the video.